The S&P 500 continued to make new high after new high, and Nvidia surged 20% after rosy earning and forecast, and it became the third largest company in the world with market cap over $2 trillion last week, and a market participant are fearless. So is the market getting ready to top out and crash? And how do we know it is getting near the tipping point? In this week's S&P 500 analysis, I will tell you one thing that needs to happen before we see a market top so you can prepare for that inevitable moment. Stay tuned. Welcome to another S&P 500 analysis. Today is February 25th, 2024. Let's take a quick recap on what the market has done for the last week. Last week, the Dow Jones Transportation was the best performer with a gain of 1.87%, but the year-to-date gain is only 0.14%. The worst performer from last week was the Russell 2000. It lost 0.79% for the week, and year-to-date, it lost 0.51%. And the S&P 500 ended the week with a new all-time high and a new all-time closing high. The S&P 500 gained 1.66% last week. Year-to-date, it gained 6.69%. The Nasdaq 100 did not close with a new all-time closing high on Friday, but it did make a new intraday all-time high. The Nasdaq 100 gained 1.42% for the week and a year-to-date gain of 6.61%. The Dow Jones Industrial also closed with a new all-time closing high and made a new all-time high on Friday. The Dow Jones Industrial gained 1.3% for the week, year-to-date gain of 3.83%. Likewise, for the New York Stock Exchange Composite, it closed at a new all-time closing high and made a new all-time high on Friday. It gained 1.19% for the week and year-to-date holding a gain of 4.53%. So far, the small cap, the Russell 2000, is the only one showing a loss for year-to-date. Now, looking at the sentiment, we see the VIX is ended the week at 13.75, and the put-call ratio is at 0.71. So the market participants are complacent and risk on. And the up-down volume ratio is not showing a strong buying pressure while the S&P 500 is making new all-time high. And also the daily advance and decline also show a lack of market participation on the upside. But the new high, new low is holding steady. And if we look closely, there is a small negative divergence between the New York Stock Exchange AD line and the S&P 500. And this is a reflection on the lackluster market participation on the recent all-time high. Now in the Nasdaq market, we see more selling pressure from the up-down volume ratio and also the daily advance and decline, showing a lack of market participation on the recent all-time high. The new high, new low is holding steady but not expanding with all-time high. The Nasdaq continued to show negative divergence with the AD line. Now let's take a look at the 11th sector in the S&P 500. The technology sector did not make a new all-time high last week, even though with Nvidia surging to a new high, it has been underperformed a bit relative to the S&P 500. The healthcare sector made a new all-time high and is performing along with the S&P 500. Consumer discretionary performing along with the S&P 500. Financial performing along with the S&P 500, and it has been on this uptrend. Communication showing a bit of underperformance relative to the S&P 500, but it is still in this uptrend. Industrial made a new all-time high and closed with a new closing high on Friday, performed along with the S&P 500, and it is still in this uptrend. Consumer stable has been underperformed relative to the S&P 500, but it is currently in this steady uptrend here. Energy has been flat relative to the S&P 500. Real estate has been underperformed relative to the S&P 500, and notice it is down 3.34% year-to-date. Material showing a bit of outperformance recently. Utility continued to underperform relative to the S&P 500, and it is showing a negative 2.16% year-to-date. Looking at some other sector, the semiconductor is outperformed relative to the S&P 500. It made a new all-time high, but did not close with a new all-time high on Friday. Oil performed relatively flat with the S&P 500. Oil exploration been underperformed relative to the S&P 500. The retailer is relatively flat with the S&P 500, but it does look like it's trying to break this resistance here. Biotech also been underperformed, but it also looks like it is forming a little bit of a bull flag, and it could be trying to make a breakout from this level here. The miner is underperformed. We are still looking at a negative 6.2% year to date. The banking sector is also relatively flat, and it is down 4.19% year to date. And the regional bank is also performing relatively flat to the S&P 500, and it is down 8.7% year to date. The home builder is at an all-time high, and it is performing along with the S&P 500. The long-term bond is underperformed, and it is down 5.07% year to date. Now, looking at the 10-year versus the 2-year yield curve, we see it's still inverted and went a bit lower this week, sitting at minus 0.442. And the 10-year versus the 3-month is at minus 1.162. The 10-year yield is still above the 4% level, sitting at 4.259. And the dollar is down a bit, came down to this 103.961, still sitting above this 103.82. And the dollar future is sitting right near the composite point of control near this 104. Oil remaining above 75, closed last Friday at 76.49. It's still looking for a possibility of moving back up to this 85 area. And silver continued to just hover around this $23 level. Gold is still holding above the 2,000 level, but still unable to break out of this consolidation area. Let's take a look at the indexes, starting with the NASDAQ 100. It is still trying to get to the symmetry major move at 18,294. And the Russell 2000 is still trying to break out of this consolidation area. The Dow Jones Transportation is still trying to move up to this 16,730 level. And the Dow Jones Industrial made a new all-time high and closed with a new all-time closing high on Friday. It closed about the 39,000. So the next level to watch on the upside is 40,000. Now, the 37,800 and 37,000 will still be the level to watch on any kind of a pullback. The S&P 500 closed with an all-time closing high and also made a new high on Friday, and it closed above the upper range. So for the coming week, if there's more new high for the S&P 500, we'll be watching for the upper range between 5157.40 and 5144.20 for potential upside, and look for a possible gap fill if it pulls back. And we first be watching the lower range between 5033.30 and 5012.50 to get tagged and look for the gap fill. Now let's take a look at the index ETF, starting with the Diamond, the Dow Jones Industrial ETF. The Diamond closed above the upper range and closed with a new closing high and also made a new all-time high last Friday. And it printed a shooting star, so any kind of pullback from this will not be surprising. But if it continued to move up, then we'd be looking for the balance area extension up here, and also the upper range between 396.80 and 395.50. Now, the 1X extension is up here at 395.81. For the downside, we could see it come back into this balance area and attempt to fill last week's gap here. So if that will cause it to tag the lower range, which is between 387.10 and 385.70. And the SPY, it tagged this 1.27, symmetry move extension, and also close above the upper range. So here we see the market is pricing in a upper range in confluent with the extension of this balance area. The upper range is between 514.80 and 513.50. And the 1X extension is sitting at 512.32, and the 127 extension is at 515.07. Now, the lower range is in confluent with the top edge of this balance area, and the lower range is between 502.20 and 500. So for the upside move, we could look for the upper range or the extension to get tagged and possibly move toward the 520 level, the next round number level. And for the downside, we could see it move back into this balance area and tag the lower range and possibly come down and fill last week's gap. Now, the Q came up and tagged the upper range, but wasn't able to close above it. It closed just right below it, and it made a new all-time high on Friday, but did not close with a new closing high. So for the coming week, we'll be monitoring the Q to see if it could get another all-time high. If it does, then we look for the upper range as a potential target. And the upper range is between 445 and 443.90. Now, if it comes down, then we look for a break of this trend line and also tagging the lower range between 429.60 and 427. Then we look for the gap fill. The IWM was unable to get up to this prior week high here, but it did hold above this lower range, the weekly lower range. So for the coming week, we'll be monitoring to see if we could get up to this 203.55 and possibly get up to this upper range between 205.50 and 204.20. If it continues to move down toward this 190 level, then we look for the lower range to get tagged, and the lower range is between 195.60 and 194.50. The expectation is for the IWM to continue to chop within this consolidation range until it makes a move either to break out or break down from this consolidation. If you'd like to see more of my content, go check out my newsletter at Substack, and the link is smtraderca.substack.com. A final note, if you have watched the entire video or watched the video up to this point, you will have noticed there are a lot more to the recent market rally than just one stock. Not only the tech and the semiconductor sector make new high, but healthcare and the industrial also made new high. In addition, we are seeing the retailers and the biotech starting to firm up, and they look like they could be setting up to break out to the upside. Now, on the indexes, we saw the Dow Jones Industrial make a new high, along with the SP500 and the New York Stock Exchange Composite, all together on last Friday. Now, historically, the market tops out when the market participation is in the narrowest and when the breadth is unfavorable. So the one thing that you need to watch the market to have happen before you start thinking about a market crash or a market top is for the broad market index, the New York Stock Exchange Composite, to fail on making a new high when other index or indexes makes new high. After that has happened, we'll then look for a negative breadth and watch for a new high from a single index, any index other than the New York Stock Exchange Composite. And when these things happen, then we should be careful on any upside move. Now that I have given you my 2 cents, I need you to give me your 2 cents by smashing the thumbs up to give it a like and help promote this video. And subscribe if you'd like to see more of these videos from me. Thank you for watching and good luck on your trading.